Hello everybody, this is Mike Prey with Keller Williams Realty with your market update for April 2023. I want to share some information that I've received in seminars, research, and other avenues about the market opening up to the new normal. I think people are getting used to the higher interest rates and economic conditions, and that is starting to manifest itself in the market. So a couple of national statistics, and remember that our market is on the leading edge of national statistics usually, so we would usually be at or above the averages here that these statistics represent. But a sign of demand increasing is that home touring was up 28% from January. So more people were out looking for homes to the tune of 28% more. 18% of adults surveyed said that they would buy in the next 12 months. That's 1 out of 5 said that they would be looking to buy a home in the next 12 months. And also statistics show that the trend of appreciation continues. That is a trend, so from month to month you could see dips and raises and dips and raises, but the trend is continuing to be an increase in the prices. In April, homes under contract, of the homes under contract, 28% were above list price, and 33% had multiple offers on them. So that is another indication of demand versus the supply out there. The inventory continues to tighten, but new purchase applications for loans were up by 5%. As I said, inventory continues to tighten. Locally, we're at 1.88 months of inventory, which is pretty low. In some specific areas, if you do the numbers last month, there were some areas that were down to 15 days worth of inventory. So in our local market, inventory certainly is tight. Interest rates are fluctuating, so they're going up and down. They're very volatile. It can change from one day to the next or a couple of times in the same day, but they're fluctuating between 6 and 7% on a 30-year fixed conventional mortgage. So that, I guess that's a stable range in there. They don't seem to be going higher than that. It's still predicted that we may see some relief even from the 6 to 7%. However, that's where they are, and people are getting used to the idea of that. I think people are realizing that we're not going to see 3% interest rates again, and that they're basically back down to where they were, or slightly above where they were pre-COVID, pre all this craziness that we've seen in the market the last couple of years. So what does that really mean to you? What does it say? Well, for buyers, it means that that home prices tend to stay up, and they are trending up, and over time they do tend to trend up and then stay up over the long term. So interest rates, on the other hand, tend to fluctuate, so they'll go up and down depending on economic conditions. And so there's a saying in the real estate industry that you should marry the home or lock in the price and date the rate, which means that you can watch the interest rates and refinance when they drop below a certain point that makes sense. But trying to time the market is a difficult thing to do, to try to buy low and get low interest rates, because prices tend to trend upward. For sellers, the demand is still high and it is continuing to increase. Inventory is low and is continuing to shrink. Even builders are always a lagging indicator. They're always a little bit behind what's happening in the market, because building is a process which seems to be taking longer and longer as we go along. So once again, housing starts were slightly down, but new inventory or new permits applied for were down even more. So the builders have been pulling back. They may start to change that, but to have any effect on the market takes several months to a year. Sales are outpacing new listings. So those are great selling conditions. If you need to sell your home or want to sell your home or are looking, ahead to your real estate goals, this is a good time to have your home out there on the market with high demand and low inventory, and people figuring out how to navigate the difference in the interest rates. Locally, homes closed were down 14.3% from March. New listings were up 16%, but homes under contract increased even more. I don't have that statistic in front of me, but even though we had more homes listed, we had more homes purchased, which reduced the inventory even more. The median sales price was down about 1.8%. It was at $412,500, which is off about 2.9% from last year at this time, which was $425,000. But once again, those numbers are kind of doing like this and floating up and down and trending upward. Days on the market continues to reduce, which is another indicator of high demand. They were down 13 days from last month at 64 days from the time the home goes on the market till it's under contract on average. Faster in some areas, more in others. For the year, it's still up 54 days from last year. Last year at this time was just pre-interest rates starting to go up. So they really started to go up toward the end of April and into May. And homes were only 10 days on the market at that time. Months of inventory is down about a quarter of a month at 1.88 months, as I said before. The interest rates are up about 0.11. They were at end of the month at about 6.43. Wells Fargo is around that today, which is early in May. Showings were up 46% from last month. That means a lot more people are out there in the market looking for a home. So people are getting used to the new normal. They're finding ways to navigate that and wrap their heads around it. So what that means is if you're waiting to get in the market, you're going to continue to be priced out. And if you're looking for a good time to put your home on the market, it appears at this point in time anyway is a good time. Well, that's the update. If you have any questions about your particular situation, value of your home, what's going on in your neighborhood, whether or not it's a good time for you to make a move, either buying or selling, please don't hesitate to give me a call at 469-446-0234. You can email me at mikepray2@gmail.com, or if you're seeing this on social media, you can message me, and I'd be glad to answer any of your questions or help you in any way that I can. It looks like we're going to continue to have a good market, and that is our update for April, and look forward to talking to you next month. Thanks.